usual. And I'm going to start with some housekeeping. So this is Alfredo Calderon for the record. We have Glenn as well on the call, and good morning, good afternoon, and good evening to all the students and participants on this call. Now let's begin with the housekeeping. In terms of housekeeping, please mute your mics. If you have any questions, you could post them on the chat, and Glenn and I will try to monitor those questions. I believe we're going to have 30 to 35 minutes of Satish presentation, and then we'll be open for questions and answers as well. Please close your video so that we can avoid issues with the broadband of some of our participants. And having said that, there's a couple of things that we need to remind you. These weekly live sessions are focused on trying to discuss each one of the modules on a weekly basis. So we try to get somebody that can speak on behalf of the issues regarding internet governance on that topic. So for future offerings, we are looking for speakers as well. So if you know of anyone, or if you feel that you are comfortable speaking on one of the issues and want to volunteer, please do so. Send us an email so we can consider your petition. All the live sessions are being recorded, and they will be posted after the session concludes in about an hour after it ends on the Moodle platform itself. And then within 24 to 48 hours, we will convert on the session, and then we'll publish it on our YouTube playlist. And we will also upload it to our Facebook page at Virtual SIG as well. So as I mentioned, we'll have between 15-20 minutes for Q&A after Satish exchange with some of vital information. And at the end of the session, as usual, we'll have a short survey that we invite all of you to answer as soon as the session concludes. And Glenn will post the link at the end of the session as well. This is just a reminder that next week we'll be having our 9th live session with Bill Juris, which will be our invited guest. And he will try to focus within the human rights module on the internationalized domain names and the DNS abuse issues that are being dealt with now, especially since we have this pandemic going on since the beginning of this year. In some countries, it's a big issue, and in some others, it's not as big an issue, but it's a concern when we speak within the internet governance context. So having said that, today we have the honor of having as the invited guest speaker, Satish Babu, all the way from Asia Pacific. So it's late in the evening for him, although for us in the Americas, it's early morning. And for those from Nigeria and Africa in general, it's the evening. So having said that, Satish, the floor is yours. Please go ahead.
Thank you very much, Alfredo, and good day to everybody. My name is Satish, and I have been lucky enough to participate in both the North America schools the last 2 years, and it's my pleasure to be here in the virtual SIG. As you can see, the second line, the line after my name here is meant as a joke, just to reflect on the number of acronyms we encounter in internet governance. And in this case, it stands for the Asia Pacific Regional at Large Organization, which is a part of ICANN, or a part of ICANN at large. The second thing is Chapters Advisory Council Steering Committee of ISOC. The third thing there is the APSIG, the Asia Pacific School on Internet Governance, and the final entity there is the India School on Internet Governance, which just got over. And I'm part of these communities. Every one of them is a community based initiative. Next slide, please. Now, I'm going to talk largely about something called cryptocurrencies, which you might have heard of. Towards the latter half of this presentation, excuse me, I'll just switch this off. Towards the latter half of this presentation, I'll be speaking about something new called the central bank digital currency, CBDCs, which are not really cryptocurrencies. But the governance issues are broadly similar. So we will, at some point, look at the governance part of these cryptocurrencies and digital currencies. Now, I'm not going to the foundational aspects because I'm sure you would have read about these things somewhere before. I'm going to focus on some of the common properties of cryptocurrencies. First is that they are decentralized. There is no central authority or central bank or a government that controls the dynamics of that currency. An exception is Facebook's Libra, which is currently kind of inactive, or rather dormant, because of a number of policy regulatory problems. It is permissionless. For me to get into trading or buying Bitcoin, I don't need anybody's permission. I don't have to have a KYC process. I don't have to provide my ID to get into Bitcoin or buy Bitcoin. This is very different from a bank these days. And the use is anonymous. All the transactions are public, but the users are not known by the names. Instead, it's called pseudo anonymity, which is not bulletproof anonymity, but it is functionally quite anonymous. It is all these currencies are censorship resistant. That means nobody can freeze my account. Now, if I don't pay taxes, my government can freeze my bank account, but nobody can freeze my Bitcoin wallet because it is by definition censorship resistant. It's actually quite low cost compared to if I want to move money from, say, Canada to, say, Venezuela in Latin America. It has got to go through multiple banks, pretty much because Venezuela is isolated and they are under sanctions. So there may not be any direct banking transaction. And the fee that is charged could be as high as $100 for every transaction, no matter what the amount is. Whereas Bitcoin, the same transaction done in Bitcoin will take 10 minutes and probably a few cents of fees. Cryptocurrencies are deflationary, which means unlike the government's printing cash, the savings in cryptocurrencies are likely to appreciate over time. And if you look at the prices of Bitcoin or Ethereum, one thing that you note is that they fluctuate wildly. There are ups and downs and sometimes steep falls and rapid rises. But in general, if you see the overall trend, it is that they appreciate over time. The transfers are near real time, pretty fast. 10 minutes is what it takes normally. It is quite convenient. We can walk around with $1 million in your pocket on a USB drive, because the actual money is not in your pocket. It is on the blockchain. What you have in your pocket is the private keys that you can use to move the money. That establishes your ownership of the money. The transactions are public and provides a programmable layer. You can automate many things. And later on, we will see something called DeFi, decentralized finance, which actually does this automation. Next slide, please. Now, most of the cryptocurrencies have a community around them. Each currency has a community. And these are all mostly decentralized, open, peer-to-peer communities and free of entry barriers. And there are various stakeholders in these communities. There are users like all of us who can use these cryptocurrencies as digital money. There are merchants who accept currency as payment, investors who speculate on the currency value appreciating, and then they hold on to money and expect it to become more valuable as they proceed over time. Developers who kind of build the actual platform. And here later on you will see something called code is law. And normally companies are bound by their bylaws and charters and documents of incorporation. Now Bitcoin, if you look at the capitalization, is like a very large company. Yet there are no bylaws for Bitcoin. There are no legally enforceable documents. There is a white paper, but it is not a legally enforceable document. What you have is code. I see some noise. Here's some noise on the line. Yeah. So what I was saying was that the Bitcoin system does not have documents as its legal basis. So what is the legal basis? Where is the legal basis? That's where the code's law comes into play. And later on, we will see that the entire the laws, so-called laws of these cryptocurrencies are embodied in code. We then have miners who, depending on the kind of coin, they participate in the mining process or creation of new coins, platform developers, and governance group. Now, there is always a governance group which consists of representatives of some of these other groups that we just mentioned. And they actually, as a community, do the governance of these coins. And sometimes the issues, the debates become so, they become extremely polarized. Sometimes these communities split. Bitcoin has actually split several times in its life so far. And each community then starts with a new flavor of the coin and continues with it. Next slide, please. There are also the media, regulators, and governments who do not have much influence on cryptocurrencies. There are also malicious actors. Now, one of the design goals of Bitcoin was that it said that we are going to operate as a network over the public internet. The public internet will have a bunch of malicious actors. We have to ensure that our software will not be susceptible to those kind of attacks. So unless the malicious actors form a majority, more than 50% of the total computing power of the network, they cannot harm Bitcoin. So this is called as BFT, the Byzantine fault tolerance of Bitcoin, which is one of the most interesting innovations that Bitcoin brought about. Now, there could be conflicts among these different categories of stakeholders, but it's assumed that every one of the stakeholders have at their heart the fact that they would like the long-term sustainability of the coin or the platform. And that brings them together despite their differences. And in some cases, in Bitcoin, many of these community members are anonymous. They may not be publicly identified, but some of them are publicly known. In fact, the originator of Bitcoin, the person or group that wrote the initial code and the white paper, are even today not well known. There are speculations as to who it could be, but it is not confirmed. Next slide, please. So we will quickly talk about some more recent developments, and this is DeFi, Libra, and the CBDCs. Next. So first we'll talk about Libra in little depth because this is an interesting development that happened last year. Next. So this is it's a consortium led by Facebook. They announced in June 2019 that they're going to create a cryptocurrency that is similar to other cryptocurrencies but different in some ways. Presently, this is stalled on account of scrutiny by many governments. And interestingly, this is founded in Geneva, not in the US. The currency Libra is initially centralized, unlike Bitcoin, which is decentralized. It is permissioned, unlike Bitcoin, which is free for anybody to join. Permission simply means that you have to get somebody's approval to join the network. And it is a stable coin. Now, I said earlier that the wild fluctuation in the prices of Bitcoin is a problem. Because suppose you're running a shop and you're accepting Bitcoin as currency. You have put price tags on your goods. Tomorrow, or rather in the next hour, the Bitcoin rates change. Now you have to replace all the price tags. Of course, these days nobody has physical tags. They have only a website that, and there it's easier. But still, it's a hassle to kind of follow this whole volatility of the coin. So stable coins are a set of coins which are pegged to some currency. It could be the yen, it could be the dollar or euro. No matter what happens, it is the same value as the dollar. So that it's much easier to then deal with those coins. The data store is a DLT. DLT stands for Digital Ledger Technology. Now, blockchain is one of the different DLTs. There are many other types which are not blockchains. It is owned by a consortium and the joining fee is about 10 million USD. Consensus, we will skip this, it's not required. It is likely to be very easy for use. And why is that? That is because we already are using Facebook. Facebook has more than 2 billion users. Many of us have Instagram or some of the other WhatsApp or other Facebook offerings. And one fine morning, all these different platforms are going to be enabled with Libra. Facebook was even considering giving some say 500 Libra free to everybody, all their users, so that we could play around and see how to transact and so on. So it is projected as cryptocurrency for all by Facebook, not by the governments. The governments actually took offense, as we will see later. Next slide, please. So as a stable coin, Libra would be pegged to a currency. Users would be able to buy Libra, move it into their wallet, and then start transacting with it. So they can use any of these tools to kind of move the money. The money is saved in wallets because it's a stable coin, will not fluctuate. And the Byzantine fault tolerance system of Libra makes it difficult to be attacked. And parties have weak anonymity when they transact. Next. So there's an association to govern Libra, but it is an opaque process. We don't have, as outsiders, even if you're using the Libra currency, we don't have access to the governance process. It is not transparent. So the role of this association is to govern the Libra initiative, govern the Libra reserve. Reserve is the amount of money they have in actual bank or similar liquid kind of instruments that will ensure that the fluctuations can be taken care of and it can be a stable coin. And then govern the Libra open source software development process. Libra also has some social impact members. That means somebody like say IEEE, which is a not-for-profit, could become a social impact member in the consortium so that they look after the end users' interests. They also had some mutual competitors in the group like Visa and MasterCard, which they said it is good because it ensure that the governance is neutral. But later PayPal, Visa and MasterCard have dropped out. Next slide, please. Now, many countries came forward and expressed their concerns when Libra came up. Why was that? Don't we normally consider cryptocurrencies as an innovation, technological innovation that makes things easier? The problem was that the banks, the central banks or the countries said that this Libra is going to become a parallel financial infrastructure, not under the control, not tied to any country or currency or regulatory framework. It is reporting to a non-democratic corporate structure. So it is like Facebook wants to become the world's private central bank. Now, some people felt that this is going to create a parallel economy, which will kind of operate under the radar of, without being visible in each country. Local currencies may be threatened, local financial systems may be threatened, and they may lose resilience. The Congress is currently scrutinizing their plans. Privacy of information, already with Facebook, it's a big problem. So the privacy of financial information becomes even more complicated. And given the fact that governments are very concerned about AML, that is anti-money laundering, which is a huge deal. It's an international bunch of practices that ensure that money doesn't get used for the wrong kinds of purposes like terrorism and so on. So Facebook, how accountable are they to these kind of mechanisms? Next slide, please. Now, Facebook will be keeping users' funds with it because users will be able to buy Libra by paying money out of their bank account, and then they will be keeping it within the Facebook system, ecosystem. But Facebook is not planning to pay interest. The profits from the operation will not be shared with users. It is going to the consortium members. So we are not very clear about how this is going to operate because the Libra Association itself is not for profit. So since it is not decentralized, users are not get benefited, and this will become some kind of this is an oligopoly of multinational corporations, what Facebook had proposed. So Facebook is not really competing with Bitcoin or Ethereum, but starting a global shadow bank without going through any legal permissions. Now, this is again a problem in the sense we would like internet to be a permissionless space where we can innovate without taking permission from anyone. But there are boundaries to such permissionless nature of the internet, which is that it cannot contradict the national government laws of the land. But that's where Facebook has a problem with Libra. Although the software itself is open source, the governance is not open, and users have no control. Next. The throughput is also a concern, because generally cryptocurrencies are much slower than credit cards by a factor of maybe 1,000 times. And that's a huge bottleneck which the cryptocurrency world is trying to solve. But even Libra is only 1,000 transactions per second, which is far, far too low. You have to multiply that by 1,000 times at least. As of now, we have a testnet, no real code yet, and the smart contracts are not encouraged as of now. Next. However, there's some advantages. The biggest advantage is financial inclusion. Facebook knows very well that a huge number of people, especially in the developing world or emerging economies, are unbanked. The formal banking system is unable to reach them for various reasons. Whereas many of them may already have Facebook accounts or WhatsApp, and they instantly become included in the financial sense. So that is a great advantage. Secondly, it is a stable coin, so it doesn't fluctuate. And for end users, the actual use may be very simple and smooth. And for the open source community, Facebook has already contributed, libraries like React.js, which are very popular among the programmers. So there could be new libraries and languages and platforms coming up, which may be of use to others as well. Next, please. So that is about Libra. Now, the reason I am mentioning Libra in some depth is that I'd like to contrast the governance aspect of Libra with the other models. Now, DeFi is decentralized finance. This is not a model of governance by itself, but it's an interesting development. I will have one slide on it. Next. So I'm calling it an emergent property. An emergent property is something that was not designed, but it just happened once the system became mature to a certain point. The interactions between different parts of the system, in this case, Ethereum and a bunch of other cryptocurrencies. When the cryptocurrency ecosystem became mature, that itself triggered the growth of new services, which were not actually designed by anybody. But when they became articulated, they became very popular. And currently, as of these days, DeFi is actually very popular, and people are making money with it. At the heart of DeFi is the fact that crypto assets can be used as loan collateral in a non-custodial fashion. Now, normally, suppose I have a mortgage, I have to mortgage my house to get to buy it. In the sense, I have to pledge the house with the bank, and the papers are all at the bank. The bank, if I am not paying the money, the bank can, through a legal process, sell the house or whatever and recover the loan. But the fact is that the documents actually are with the bank, not with me. The moment I take the loan, the documents go to the bank. That is a custodial fashion. The bank has custody of the documents. But in DeFi, I have some Ethereum or Bitcoin or whatever currency. I can pledge it without the currency leaving my wallet. But the bank has a lien on it. It has got a certain degree of control over it. But I can stake it to them, and they can lend it to, using that as stake, they can lend it to other people. And so currently what's happening is, anybody who has got some money with them, cryptocurrencies, they are actually staking it into these staking pools, which then provide loans to people that need it. And the rates of interest is, and one of the important thing here is that the loans are very secure. What happens is there's a smart contract governing this. If there is any problem, for instance, the value is fluctuating and it is suddenly going below the loan amount, the smart contract gets triggered and it liquidates the loan immediately and collects the money back. So it's like 100% security for loans, and that makes interest rates at a much higher level. Currently, the interest rates, people are getting yields of sometimes supranormal yields, even more than 100% per year on an annual basis with DeFi. Now, there is a risk here in the sense of we do not know when the whole market overheats, what's going to happen. But currently, platforms like Ethereum and a bunch of others are able to do this lending business using DeFi pretty well. And the whole process is very easy. It is automated. You can do it from your wallet, from your mobile. You can lend, you can borrow, you can pay your interest, you can make interest revenues, etc. And this is some thing that has just in the last 1 year come out as an important aspect of the cryptocurrencies. Now, not everybody trusts this thing. People are still reluctant to kind of trust it fully. Next. Now we go on to another development, which is this CBDCs. Next slide, please. Now, here we look at the COVID effect. Now, the BIS is the Bank of International Settlements. It is the central bank of all central banks. They are the ones who create all the financial, financial action task force and all that. Many international, laws and regulations on how the banks have to kind of operate among themselves, central banks. Now, what they said was that in April they came out with a bulletin where they said that there was a lot of public concern that the coronavirus could be transmitted by cash, but their studies show that such chances are very low. But central banks are anyway resorting to measures like sterilizing equipment, ATMs, and all that, and quarantining cash. The cash collected from ATMs is kept in a place for 3 or 4 or whatever number of days as per the protocol, and providing messaging to the public. However, the last point they said was that the pandemic may amplify calls to defend the role of cash, but it also calls for central bank digital currencies. Now, this is a very strongly articulated phrase. It says that they are calling for the creation of central bank digital currencies. Now, what are these things? CBDCs. Next. Now, when Libra came up, so many central banks objected, saying that you're trying to create a parallel economy in our own countries. But it actually exposed themselves, because Libra had a bunch of conveniences, whereas the central bank's offerings were still only cash. At best, what they had was ATMs. You can pull out money from the corner cash machine. But beyond that, people could not, kind of operate cash with their mobile devices, or borrow money, lend money like DeFi. So none of those innovations were available for central banks. So central banks began to start seriously looking at a digital currency, which is not cryptocurrency, but a digital dollar. Like just a couple of days back, last week, the Central Bank of the Bahamas released their Sand Dollar project, which is the Bahamian dollar in digital form, exactly tied to the dollar in terms of value. But you can use it on your mobile, in the wallet on your mobile device. You can transact very easily. You can even transact if it's offline. So the internet, because they're all islands in the Bahamas, there could be some hurricane coming and knocking down all the internet infrastructure. And this is actually, the wallet is designed to even support offline transactions to a certain level, to a preset level. So that's a very resilient way of using money, a very simplified, convenient, flexible way. So basically, the central bank digital currency is the digital currency of every country. For India, it would be the digital rupee. For the US, it will be the digital dollar, and so on. And these are all a claim on the central bank. Now, this is a very subtle difference. When you put a sum of money in a fixed deposit in a bank, the bank, like in India, for example, there is a limit of 200,000 rupees that the bank guarantees. If I put 1 million rupees in the bank, and there is a problem with the bank, there's a run on the bank only guarantees 200,000 out of that. Now that's because the banks, what the guarantee does is governed by the regulations. But here, this is a direct claim on the central bank. The central bank claim means it is 100% supported, meaning if I put $1 million there, central bank will have to give me $1 million back. So the stability, security of that money is safe, compared to the bank deposit. Next slide, please. So a lot of advantages: efficient payment system for small and large users, an instrument for achieving financial inclusion. So many things we said were the advantages of Libra now are coming as advantage of CBDCs. The central bank can precisely monitor and manage the money supply. It is very cost effective. The cost of printing currency notes and coins, and securely printing, securely transporting, securely retrieving, securely destroying this is actually a mounting cost. As the total cash volumes increase, central banks have an increased problem with managing all this. The logistics itself is very hard, but the costs are even higher. So whereas when you move to CBDCs, you control the cost to a great extent. Of course, there is infrastructure required there also, but it is actually much easier to manage and scalable also. And overall, it enhances the resilience of payment system for the whole economy. It makes things more automated. You can actually move asset management, for example, land records. You can move it online onto these CBDCs, so that when you transfer land, when you sell land, it's on the kind of DLT itself. Next. You can even transact internationally with other banks' CBDCs, and you can automate. It provides agility, flexibility, responsiveness, and security to the entire financial sector. And it offers central banks a chance to counter the claim of advantages like Libra was claiming. Next. So here is an implementation. This is not for great detail, but at the bottom you have the user wallets, which are in your mobile phone. You have these PSPs, which are payment service processors. So they are the ones who take this. The user wallet actually submits the transaction to them. Now there are multiple models in existence. I'm not going to get into the details, but the point is that there is a DLT, as you can see on the left. That is the digital ledger technology. That is the blockchain or equivalent, where all the records are stored. The mint controller controls the central bank operations of minting and burning. Mint/burn. These are central bank operations where you create currency and you destroy currency. Mint and burn. We have regulators and we have external other central banks of other countries that you can network with and have transactions. Next. So there are several advantages. My time is running out, so I'm going a little fast. Several advantages like precise control, lower cost, lesser risk, user convenience. And shortly, we'll see many countries launching CBDCs, and they will support individual, merchant, and international transactions, and will create transformative changes in financial markets with more financial services, including physical assets, international trade, opening letters of credit, etc. More things are going to be brought under the digital label. Next. One slide or a couple of slides about governance. Next. I will summarize rather than go through all this. So first is that there are a bunch of, now each cryptocurrency is a central bank, if you look at it that way, because whatever central bank does, a large bulk of that, every cryptocurrency like Bitcoin or Ethereum, they have to manage internally. These are things like total money supply, the mint burn policy, the block size, hash difficulty. So there are a bunch of things actually, without going into details. Now these are all embodied into code, and all policies are in code and not as documents. And code is actionable, and this is why we say code is law. Next slide. Now we see three different governance models so far. The first is the Bitcoin model of open decentralized participation with community governance with no entry barriers. The second is the Libra model, which is permissioned. So you have to take somebody's permission to come into it. Opaque governance by an oligarch. And the third is CBDC itself, which is it's good, convenient, but it actually implements the nation's fiscal policy through the central bank. Next. My last slide. Next. So cryptocurrencies have come a long way from the initial launch of the Bitcoin in 2008. Each cryptocurrency is in effect its own central bank and carry out many roles of the central banks in their implementation. And that implementation is embodied as the code. Now, the digital currency, which was a completely private initiative, meaning by communities, not by governments. And governments initially ignored these developments in digital currencies. Then they said it is illegal. Then some of the governments accepted it. And even today, there are many governments which have not accepted cryptocurrencies. Blockchain is okay as a neutral technology, but cryptocurrencies, because they feel people are going to get scammed. In India, actually, there were some scams where it has nothing to do with the cryptocurrency itself, but it is in the name of Bitcoin. So the Bitcoin got a bad name because their name got spoiled. And the government's position is kind of very cautious, saying that we don't want to open up because the ordinary citizen is going to lose their money in these scams. So they tried all kinds of, positions to resist the digital currencies, the cryptocurrencies coming in. But finally, the governments have been forced to innovate and come out with these CBDCs as a response, so that some of the advantages goes to the citizens. So now all these three models are parallel. They are not, one can't say that they are superior or inferior, and they're going to continue into the future. But what is very clear is that with these innovations and many more to come, and many more that I have not mentioned, the role of money in society is going to be transformed. And the way we're going to use money and the way we're going to automate things are going to be completely unrecognizable in about a decade's time from now. So these are very exciting times, and a lot of things are happening. So far, we thought digital currencies and the central banks, they don't mix. Cryptocurrencies and central banks. But today we see that they have actually merged into a new thing called CBDCs. So I'll stop here, and I'll be happy to take a few questions.
Great. Thank you so much, Satish. I got a number of questions. I'm going to start off with Kapal's questions. Here we go. How do you view social economic impact on digital currency in India, having much wider consumer base, considering implications for developing economies such as in South Asia?
Right. So there are a number of aspects to this. The original question as to why did anybody need cryptocurrencies? To understand that question, one had to look at the origins of the philosophical origins of cryptocurrencies, which had to do with the cypherpunk movement of the 90s, which were a group of people who were, I would say, fanatically anti-government. And each time there was a financial crisis, they would become more and more strident in their demand for bypassing the government totally. So the origins of Bitcoin is that it is from a group of people who said, we don't want government, we will run our own currency. And they were sufficiently innovative that they did manage to do exactly that. So there was that social aspect also, in the sense the citizens should be able to take care of their own value transfer. Now, currency traditionally has got three roles. It is a medium of exchange, like when you buy and sell. It's a storage of value, like when you want to keep holding onto the currency, and it'll grow or whatever. And the third is the unit of accounting. If you want to have an account statement, a profit and loss statement, or a trial balance or a balance sheet, you have to have a currency to represent those numbers in. So these were the traditional roles. So the Bitcoin was not a full currency in that sense, but I think it has made a lot of leeway into. It has provided a lot of options for people to transact, and therefore there is that social component. Now, the problem is actually that many countries do not allow Bitcoins to be, or cryptocurrencies to be used, because the policy positions are, like in India, there is a huge number of people who are unbanked. Now, if cryptocurrencies were allowed, maybe they could do transactions. Maybe somebody would be innovative and they would kind of create a platform where even people without smartphones, with just feature phones, they can transact. They can move money from, like for example, migrants. There are a lot of very large numbers of migrants in India. They go for work into faraway places in the same country itself. So now to get money from where they earn to where they want to consume it, which is in their homes with their wives and children and mothers and fathers, that is a hard process because the banks don't reach everywhere. Whereas if you had cryptocurrency, you could simply transfer it even from a feature phone. It would have been a very simple process. So ideally, that is where we would have been heading if the governments were open with the whole policy. Now, if you look at CBDCs, a part of that criticism is now kind of gone because the CBDCs would offer the same convenience. So we are looking at the central banks to provide the same kind of convenience that Libra was offering. It might take some time. And if you look at the Bahamas example of Sand Dollar, this morning I had a call with the team that was doing this, and they were explaining about it. They in fact had to even invent a hardware piece for networking to ensure that the Sand Dollar system could work well. So we are still talking about some amount of innovation required, but the social requirement will be there. And central banks, of course, are not driven by profits. They are driven by the social commitment, at least to the national policy. So that way there is an alignment. So I'll stop here.
Great, thank you. I'm going to turn to, I'll get back to you, Kapil, but I want to make sure I catch everybody with some questions. I want to turn to Vikram's questions, and it gets back to some fundamentals. He's asking, Satish, how do you actually open up an account or wallet from places where there is monetary exchange controls? In normal countries, it would be easy. So he's asking, in countries which have a high level of restrictions, how do you actually make it happen?
Right. So that's a great question. The first thing is that this is exactly the use case for which the cryptocurrencies were designed for, where the governments are oppressive, the governments don't want you to kind of transact. That's exactly the kind of position or the place where we can use cryptocurrencies. Now, what you require to operate cryptocurrencies is only an open network. You can run cryptocurrency nodes over some of the VPNs, but we need to have a functioning internet. That is the only requirement that you really must have. So suppose you're in a country where there are several financial barriers. You're not allowed to open a bank account, or the bank account is not allowed to transact money, or you're not allowed to send money to a country. In all these cases, all you need is a laptop. Now the problem with cryptocurrency, the problem that we should be aware of. In a bank, if you put money there, the bank will look after our money, but the bank is the intermediary. In cryptocurrency, there is no intermediary. If I am paying another person, then that transaction is directly from me to him or her. There's no intermediary in the picture. So that makes everything much easier and more efficient. But there is the flip side to that. I have to then take care of my own money. I have to guard my own money. If I have my money in my laptop, and what is actually on the laptop is not the money, but the private key with which I can move the money which is on the blockchain. If I lose my laptop, if my laptop crashes, if I have a wallet on my mobile and somebody steals it, basically I lose my money. The Bitcoin protocol itself is resilient. It has not been kind of compromised by anybody so far. But there are so many other ways to lose money. But we don't realize that, because in the bank, when you're dealing with the bank takes care of that for you. So now coming back to the question of how does one who is living in a country which has got restrictions, how does one use Bitcoin? So what you do is you download Bitcoin, the client, and you run it on your laptop, and now you're a part of the network. Now, Bitcoin network is designed to have people coming in, going out without any rhyme or reason. You can join when you want, when you can withdraw when you want. And when you want to transact, now if somebody wants to give you money, it's very easy. All you do is generate an address and give it to the other person by email or whatever other way. And that person transfers money into that address. And now that address is controlled by you. So the money is basically with you. The money or the actual the coin itself is on the blockchain, but that's a detail, because you have the private key with which you can do anything with that money. You can move it to somebody else, you can keep it. So the important thing is that you have to guard your private keys, which are on your machine, your mobile. And there have been also cases of you trusting a third party who is providing some convenient service like parking your money. There have been so many cases where the third parties have folded up, or they have been kind of hacked, and they have themselves lost the money. So the safest is when you store your own money. You don't have to bother about anything else, but you have to take precautions. What if your hard disk crashes? So there are elaborate ways of paper keys and printing it out on a piece of paper and keeping it, etc. So it has been solved, but you have to go the full hog. It's not necessarily very easy, but it can be done. And no matter which country you are in, unless they block all internet, you can still use the cryptocurrency. A good example is China, which does a lot of mining for Bitcoin. Although the internet, as we know, is not perfectly, not perfectly fully open there, but they're still able to survive.
Great. Thank you, Satish. I want to turn to Adil. I just opened up your mic, Adil. Go ahead.
Thank you, Glenn. You can hear me?
Yes, yes, I can. Go ahead.
I'll start by saying that I have been, by the way, I am Adil from Pakistan. And I have been hearing some of the presentations on digital currency for the past 2 years, and either they became too technical or too complex for me to understand in the end. So this presentation, I have to say, was the most comprehensive one, and I actually understood everything that was being said. So thank you, Satish, for that beautiful presentation. So I have actually two short questions from your presentation. So initially you mentioned that the transactions are visible, but the end parties are not. So does that mean that whenever I make a transaction, everybody else can also see what is being happen on the network, how many bitcoins are being exchanged, or how does it? I mean, I was hoping that it would also be private like the end parties, so it's a complete kind of like privacy ensured. And the second question would be about the authenticity of receiver. You know, where I am from, like especially in South Asia, when I am putting my bank account number, so they will give me the name of that person. Okay, this bank account number is corresponding to Glenn McKnight, and now I can make the transaction. I am sure that he is the right person. But in the Bitcoin, if the end parties are not visible, how can you be sure that the receiver or that the receiver and that person is authentic or not?
Thanks so much, Adil, for your first for your feedback. It sounds very good to me. Secondly, on the first question of on the public nature of the transactions. Now, what happens is that first of all, there are multiple cryptocurrencies and multiple blockchain models. There are now several cryptocurrencies which actually do not allow the information to be shared or seen or visible or made visible. I was talking about Bitcoin. In Bitcoin, all transactions are public. All the parties are, however, identified only by their by a long string, which does not. If you look at it, it doesn't point to any person, place, thing, country, nothing. It is just a string, and with that, we cannot figure out who that party actually is. So the transactions themselves are public. So there's a party A, the sender, party B, the recipient. Then there is an amount X, which is the actual money that is transferred. This information is public. But party A and party B are actually cryptographic addresses, using which you cannot identify the person. Now, there are actually some other platforms, for example, Hyperledger Fabric, wherein nothing is visible. Everything is only made visible to people who are required to see it, who are officially allowed to see it. That's one. On the second part, how do you identify the user? Now, the answer is that you cannot identify the user. That is it's partly a feature, partly a bug, which means all you are given is an address. Now, suppose you have a friend and you want to transfer some money to her, and you ask her, what is her address? She gives an address. Now, you have actually no way to figure out whether it's her address or someone else's address. Now, there have been several recorded cases of people sending money to the wrong people. And once it is done, unlike in a bank, this is gone. There is no way to recover it because it's a direct transaction. There's no way to reverse it. So if you, by mistake, transfer money to the wrong person, first of all, there is no way to identify the person except that person telling you this is my address. Secondly, if the transfer is made and it's to the wrong person, there is no way to recover it. So that is the nature of the thing, because you can't reverse it. If you try to reverse, now there are certain situations when, like credit card companies, there's a lot of fraud happening on these reversals. So in cryptocurrency, the transaction is, once it is done, and there is no way to reverse it. There's no way to appeal to somebody because there's nobody else in this whole thing. There's only two parties, and you are actually willingly, knowingly transferring money, and it goes there, and that's the end of it. I hope I've answered your question.
Great. I think you did. That's fantastic. Lots of great questions are coming in. But I've just opened up the mic for Rudy. Again, we're trying to experiment with this tool, and we're opening up the mics. Everybody else, please mute so we can hear Rudy. Can you go ahead, Rudy?
Can you hear me well?
Yeah, I can hear you fine. Go ahead.
Good, excellent. Satish, thank you so much for a really excellent presentation on that. I mean, it cleared up a lot of my questions that I had earlier. But I know that there have been concerns about blockchain-based digital currencies, that they may not be able to handle the rate of transactions expected in reality. How would the various platforms deal with this, if it is indeed a real concern?
Thanks very much for your question. Indeed, you have highlighted a very important aspect of blockchain that has not yet been fully resolved. Due to the nature of the way the blockchain system works. Now remember, this is a global network where every transaction is announced to the entire network, and the approval comes from a complicated process called mining and consensus. I mean, I don't even want to get into this, but the thing is that a transaction is branded as official when there is a consensus process and it is succeeded in the consensus process. Now, this process takes some time, and there is a limit to how many transactions you can include in one batch. Now, every 10 minutes, one new batch, I'm talking about Bitcoin now, the others have improved on this. So the main problem, therefore, is that the throughput is by no means comparable to the traditional credit card or banking systems. Now, what the cryptocurrency communities have been trying to do, they have been trying to increase this number from, say, 10 transactions to 20 transactions a minute. So there have been various innovations happening. There are various ways to kind of increase the speed. There is increase of the block size and the frequency, etc. But we have to be careful that the rigor of the security of the blockchain system or the Bitcoin system comes from the this process of consensus. So we should ensure that no matter what we do, the system's basic robustness cannot be compromised. So if you look at Bitcoin, we are still stuck at a very low rate. If you look at Ethereum, they are currently going for Ethereum 2.0, where there is a significant increase in the throughput, but still it's by an order of, say, magnitude, which means 10 times it has gone up, but not like 1,000 times that is required really. There are a few unproven technologies which are now talking about very large numbers comparable to the credit card, Visa, MasterCard kind of things. But they are new. They have not been around for long. So we are not really sure whether they have any security vulnerabilities, etc. We have to see them in action for some time. So the final, in summary, I would say that this is indeed a main problem with cryptocurrencies, that their throughput is very low compared to the traditional systems. We are improving, but we cannot be guaranteed that we have cracked this problem.
Thank you, Satish. I just had a quick question. Can you give permission for people to share the slideshow that you did?
Yeah. It's open. Anybody can use it. Not an issue at all.
Okay, I'm just gonna. I just converted it to ebook. Let me check. Kapal has said there was a problem with the link. Let me check on that. Okay, let's go back to the questions. We're doing very well. We got about 5 more minutes. Alfredo, can you go ahead with your question?
Yes, Satish, my question was, I guess, a simple question. Can you do transactions between 2 different networks with blockchain and Bitcoin?
Yeah. So if you're meaning when you say 2 different networks, as long as we are still talking about the single unified internet, it doesn't matter which corner of the internet you are in, which country you are in, which local network you are in. If internet works, which means things like the Google and Skype and all work, then your location, your computer device, operating system, none of these are problems. You can transact.
Okay, thank you. Glenn, go ahead.
Yeah, this is great. We have so many questions and so much. We just scratched the surface, and time just flew by so quickly. I wanted to make sure someone else who had a chance to actually hear their voice, because we see them chatting. Is there anyone else that I can unmute their mic? Vikram, are you interested in seeing a comment? Okay, it looks like Adil is. I think Adil, your mic is still unmuted. So go ahead.
So, Satish, you mentioned that the devaluation of the cryptocurrencies. So I was wondering that I remember that 2 years ago when this started, they were around like maybe 17,000 US dollar. One Bitcoin was equal to that. Then in the Christmas time, it even went to 19,000, and right now it is 13,000 US dollars. So it means that the devaluation, or maybe the prices are going up and down. So I did not understand where you try to tell that there will not be a devaluation of the currency since it's a digital currency. If you can explain me that again.
Right. Thank you for the question. That's also an interesting aspect of Bitcoin. The thing is, when somebody asks the question, who fixes the rates for a particular stock? Now, we all know the answer is that no single person or entity fixes the stock prices. It is an automatic resultant of the demand-supply relation of that particular stock. So who fixes the Bitcoin prices, Bitcoin exchange rate? It is a similar process. Now, when people suddenly realize that Bitcoin is going to be, going to deliver positive results in terms of holding on to it, lots of money comes in. So we have had so many spikes in the past, if you look at it, wherein the 17,000, 19,000, etc. In fact, when I started in 2013, I invested some money, not as an investment, because I'm not very confident, sufficiently confident to invest my own personal money into this, but I was actually trying to learn how to use Bitcoin, so I invested some money into it. And later, this is in March 2013, and in December 2013, my son was getting married, so I said I need all the money. I liquidated it, and I found I made a huge supranormal profit at that time. That is because during that year, from March to December, it went up about 2 times or 3 times, something like that. Now, there are also equally very spectacular crashes. Now, when I say the long-term, what is called a secular trend, that means there's a term in economics which says, the overall trend for a sufficiently long period of time. So in Bitcoin, when there is speculation, just like any other stock, it will kind of rapidly rise and then fall again when the speculation goes away. And that's what happened in the case of Bitcoin. When there's also the policy implications. There was one case where one particularly big country banned some aspect of Bitcoin, when that sentiment again, brought down the prices. Now, what I'm saying is basically that over a period of time, say you take 3 or 4 or 5 years, the movement of the Bitcoin is generally, according to the original white paper, it is a deflationary kind of a model, because the way Bitcoins are created is in a very strict and controlled fashion. The way Bitcoin is lost is through so many processes. So there is a burning of Bitcoin, which is deliberate sometimes. People lose Bitcoin because they have lost access to their private keys. In fact, one of the most significant investors in Bitcoin is the person who started Bitcoin. So he's got several billions of Bitcoin, which is worth several billions now, but nobody knows who it is. He has not touched that amount. And if he's dead, that thing is lost also. So the general, what we see is that the number of Bitcoin created new, there is a very clear path, and that path halves every 4 years. So the number of Bitcoin created in a year, every 4 years, it comes down by half. The overall circulation, therefore, is going to increase at a decreasing rate. But given the fact that you're also kind of losing Bitcoin through various other things, the general perception is that over a long period of time, Bitcoin will continue to rise. There will be short-term, sudden rising, sudden falling, etc. But overall, the secular trend, as they say in economics, is that it is a deflationary currency, and it will increase over a period of time. Sorry for the long-winded kind of explanation.
Great. Unfortunately, time has slipped by. We've completed an hour, and this is another example where we could go much longer than this. And unfortunately, we appreciate your time, and you're committed for an hour. But perhaps we can revisit this with this group or the next group. But I'd like to again express my sincere appreciation for your time. It's always great to work with you. And thank you everybody for your great questions. And I'll turn over to Alfredo.
Yes, thank you, Glenn. And I want to share the appreciation and the collaboration that Satish has offered with this live session and during the 2 previous NASIC schools that we've had in North America. I guess we can continue with this discussion in the corresponding discussion forum. So all the questions you may have, post them there, and I'm sure that Satish will be available to respond to all of those questions. Satish emails is within the participants in this cohort, so please look for him. and you can have a private chat with him if you wish as well. As a last announcement, I would also like to remind all the participants to complete the quizzes if they are pursuing the certificate of participation. If you're not, it's okay. And I would also like to let you know that we're planning to have a special event on November the 20th. So please save that date. We'll give you more details later on. Again, Satish, thank you so much for your live exchange. Your conversation was incredible. And as Glenn mentioned, we could keep on going for another hour, but we have 1 minute.
Thanks very much, Alfredo. My pleasure.
Yes, thank you. And with that, we finish this session. Thank you all for participating. Have a wonderful day wherever you're from. Thank you.
Thank you. Bye-bye.
Bye, everybody.